Okay, Coin Live. Welcome to OK Coin Live, the bear market episode with the OK Coin listings team. Davica,
Woo!
yes, Harrison. Where's your woo?
Woo!
There we go. And Alex. Our topic for today was getting all of you through the bear market blues. Are you guys ready for this?
So ready.
Never been more ready.
I feel like it's pretty much like our team call just recorded for TV, right?
Basically, just be more PC. Don't get us into trouble.
Oh man, I can't do this. I cannot promise things I cannot deliver on, you know?
I guess it'll be entertainment if you get fired.
That's true. I'm going to get fired live on air. Okay, going live, just straight up firing of Alex. Are you telling me I'm not PC?
No, you're super PC. That was a joke. That was just to get people into the show. They'll keep waiting. They'll wait till the end to see what you're gonna say, and then boom, nothing.
Wait
Hold on,
until
guys. Hold on. I think we have. It looks like Hong Fang is joining. She might have a message for you, Alex.
get her on, get our CEO on. I feel like, by the way, at the end we're gonna do the circle of death. Circle of death is like the okay or not okay, but we're gonna go round robin. We're gonna ask each other things, just rapid fire stuff.
Sounds
Okay,
great.
Can't wait.
so let me kick us off. Today we're recording this July 13th. We're gonna timestamp it. Sorry, people who don't want us to timestamp. We just had the CPI print come out, 9.1% inflation. Woo woo! More
Yeah.
money, more problems.
Less money, more problems.
Less money, more less purchasing power, more problems. How do you guys feel?
Very poor at this point. And really hoping that my bear market portfolio goes up at some point. So excited to learn about what we're gonna do in this bear market as a listing team.
I don't know. Whoever is like the leader of the listings better know have an answer because I sure don't. Harrison, what are we doing?
So I have two things. One, I'm very thankful I don't live in Argentina, where the inflation is 60%. Uh, could be way worse, right, guys? I think we should be thankful for that. Secondly, as Alex knows quite well, I've been shorting slash been in some cash for the last 5 6 months. So seeing inflation that high, I'm feeling okay about it. Definitely got lucky with that, but
So basically, Harrison, high inflation, okay or not okay?
it's okay. It's okay. It could be worse. It could be worse.
Uh, okay, just a quick aside. We're all obviously kidding and high energy here, but it's a painful time in the market. So we there's a lot of empathy. I'm hurting. I haven't shorted anything. I rode this baby up and I'm riding this baby down, and hopefully I'm riding this baby up again. So for those of you that are out there that are, that are hurting, we're not trying to make light of the situation. Well, I guess we are because it's like, what else can you do but kind of laugh at this? But hopefully we can talk a little bit about what you can do in the bear market. And we do want to say that we feel your pain. It is painful for many people. It's scary for many people. It's scary to be in this market for the first time for many people. If you're a first time entrant to crypto and you came in 2020, 2021, and you saw it right up, and a lot of your coins are down, some are 99%, Bitcoin is down 77%. It's not fun. It is not fun. And so we feel your pain, but just bear with us as we kind of talk and joke our way through this because again, if we can't laugh at the situation that we can't really control, we might as well at least just give you guys some good information, not financial advice, but have a little bit of fun through it because there's nothing else we can do, right, guys?
Totally. So yeah, why don't we just start jumping into it and start asking the questions? So I can start with the basic one, right? People are wondering, so what is a bear market?
Scary time. Harrison, what for Harrison? It's a good time. Apparently, he just all smiles like ear to ear. Harrison, what's a bear market?
Yeah, I should clarify. I didn't short any crypto, unfortunately. But a bear market to me is basically when you stop checking your phone, you stop checking price because things are just so bad out there. Um, no, but in reality, I think. Oh, look at this guy.
Oh, sorry, we're not in the bear market. I was checking. Wow, Bitcoin, Bitcoin right now is at 19.8. Went up from 19.1. Solid. please keep on going.
Maybe we're not in a bear
Congratulations.
market anymore.
I guess we're out of the bear market.
You heard
Uh,
it
Um,
here first on OK Coin Live. Bear market is over.
Well, but I guess jokes aside, right? Like a bear market is when I'm looking at the price trajectory, like on a map, or if I'm looking at Bitcoin, right? Like the prices are in a constant downward trend versus like an upward trend. So, we're in a bear market till the prices keep going down. And at some point, we're hoping that there's going to be a price floor. At which point will we start going into bull market, which is when the prices start going higher again. So currently, we're in a bear market, but we use those terms assuming that a bear market inevitably has to come to an end. That's what we see in the equity market, and I think that's what we've seen traditionally in the crypto market. Would you guys agree that that's what we're expecting to see in the future here as well?
Yeah.
Alex, you want to take this one?
Yeah. So look, in the stocks, 20% down is called the bear market. In crypto, there's much higher volatility. So 20% is like a Sunday afternoon in Bitcoin land. So it has to be it's going a lot lower. Clearly, we've been in a downtrend, right? So there is a downtrend of the market. If you look at technical analysis, lower highs, lower lows. Um, Something that falls technically by more than 20%. Again, I think in crypto we should be looking at something around 40-50%, because even in bull runs we've have some of these drawdowns in crypto that are pretty violent and pretty volatile. But it's a prolonged period of time where the sentiment is bad. And actually, Harrison wasn't kidding. I think it's when the whole world stops talking about crypto, there's a flush out event, and we should talk about 3AC, we should talk about Voyager, BlockFi, Celsius. Um, when you have this flush out event, when you do stop checking your phone, when you're actually stop degenning and go outside and like get some fresh air and go on a hike or something, that is the bottom of the market. Okay. Speaking of, I'm gonna go on a hike in a little bit, so we gotta wrap this show up because I
That's so
can't look at the prices anymore.
So I guess I have one more question to this. So, would you say crypto is dead?
Harrison, this is all you.
No, absolutely not. This is actually I'm gonna do a quick plug for Davica and I. We're writing up a piece on doing a chronological history of all the Bitcoin bear markets, and this one compared to past is actually not. We've seen down 80%, 85%. I think we got close to down 90% in the past bear market. And, so this time around, we're still around last cycle's all time highs. We did drop below, which was sad to see, but I think there's so much capital flooding the space. You saw Andreessen Horowitz just raise a $4 billion fund, $5 billion fund. All of that is dedicated to digital assets, the growth of digital assets. So I'm not worried about it. I think this cycle is more macro driven than adoption driven, and I think it might last for as long as the recession lasts, for as long as these supply chain issues last, inflation lasts. But on the other side, we're going to be better than we've ever been, from my standpoint.
I have this interesting macro thesis about this, guys, and I want to see if this resonates with you. If you look at any new technology, there's an adoption curve, and all of our listeners and watchers, guys can go on and look at an adoption curve. Technically, it looks
An S curve?
it's an S curve. It's an exponential up, flattens, and then really kind of kicks in for especially new tech. And just think about it logically, right? When there's a new technology that comes up, let's just look at Bitcoin. The first people that adopted are like the hardcore uh, cryptographers, right? That are looking and thinking. They're deep in their Reddits. They're deep in the communities, literally coming up with the protocol. Then more people adopt, it crashes, small crash, right? It went from cents to a couple bucks, crashed. Then the hardcore geeks adopted, right? It went to a couple $100, crashed. Then the more technologists adopted. The point is, after 2017, Wall Street started coming in, right? And right now it's this introductory to crypto for Wall Street. The bigger an asset class gets, the more money it takes to move that asset class. Wall Street obviously has the most funds. And so there are a couple proxies of that I look at to judge where we are in the crypto cycle, because of because Wall Street money is ultimately it's what's going to take it, to the next leg. Wall Street pensions, treasuries, and then retail FOMO comes in at the end. And so one is the GBTC premium or discount. So for those who don't know, GBTC is a grayscale Bitcoin trust. It's always traded more or less at 20-30% premium. But now it's about a 20-30% discount to NAV, net asset value. So it just shows you that the secondary market, the tradable market, is nervous. It's risk off, right? That's part one. Part two is, does the general liquidity suck? And when liquidity comes out of the markets, the highest and the most speculative assets, in which crypto right now is, because Wall Street misunderstands Bitcoin. And crypto outside of Bitcoin is a speculative asset. Bitcoin, I think, is separate. And so the other thing you can look at is the drawdown of Bitcoin, 70% or so, versus the drawdown of some of the tech stocks. Netflix, right, is down by 75 or whatever, close to 80%. Coinbase down by 85% or so from its highs. So Wall Street is actually looking at an exchange like Coinbase and valuing it at less than Bitcoin, even though Coinbase, and just like us, we have fees and revenue that happen in bear and bull markets, right? Because people trade regardless, right? So theoretically, Coinbase should be drawn down less than the underlying assets than Bitcoin, or it should be some sort of amalgamation of Bitcoin plus the other risk assets plus some sort of volume play. And so when you look at these things, like Netflix is at where the price was in 2015 or 2016 or something along those lines. Surely the company has moved on and became much better than it was then. So it's a complete drawdown, over drawdown of risk. When that changes, when you see start some of the ARK funds, higher risk, funds start getting more money in, that's when I think money will start coming back into crypto, right? This is when Wall Street money starts coming back into crypto, and this is when we're going to see a shift. And I think we're actually fairly close to it. What do you guys think?
I think I think I agree with you. I have a slightly different perspective on looking at the market, and it's arguably a little bit less quantitative than the
Good.
one Alex just gave. But for me, just as somebody who was looking at Bitcoin, crypto general back in 2017 when Alex and I were both at Microsoft discussing what blockchain was, and he was trying to convince me that crypto was the future. We talked about a few things. The first is when you look at any technology adoption, going to what Alex said, I think there is going to be a point where, like the internet, there's going to be a boom and everybody tries to get in. And I kind of feel like the last 2 years where we were at that boom, right? Where in crypto, there were so many VC funds that were trying to get in. There were so many, institutional investors trying to get in. There were so many retail investors trying to get in. And as a result of that, there were so many token projects that were trying to raise funds and getting those funds. I actually think that, similar to what happened with the internet and .com bust, we're kind of experiencing that bust in crypto right now, which is that there was an overinflation of prices, there was an overinflation of valuations for projects that didn't have sound tokenomics. So I was seeing this myself, with a lot of my friends who are investors. If somebody put in the word crypto in their deck, they were getting $5 million pre-seed, right? Or with very little traction. And I think now we're seeing even institutional investors being a lot more cautious with the way that they're dealing with their funds. So I think for me, it's really a lack of, I mean, there was just too many projects in the market. There was just too much money in the market with a very little underlying tokenomics and economics. And I feel like for me now, we're seeing the correction where we're now going to see projects that actually have sound economics, that have sound technology, versus just trying to, like, a lot of companies trying to get in on the boom. So it's kind of two sides of the same coin, but that's how I've been thinking about it. Harrison, what do you think?
Yeah. I want to add to what you're saying. I think we just had a call with a venture capital firm that's quite prescient. One of the anecdotes he provided was that crypto companies are being forced to raise money for only 1 year, 1.5 years of budget instead of 2 to 3 years of budget. And they're being looked at or assessed based on traditional Web2 tech company metrics. So they're forced to create a use case, create revenue earlier on in their life cycles, which I think, if anything, it will create more high quality companies. That there will be less tokens to degen into, which some people might be sad about. I'll personally be okay. It's a lot of stress degenning. I don't know what you guys think about it, but
Harrison, degen, okay, not okay.
I think it's okay.
Oh yes.
Um,
uh,
but
Everything.
but I guess, yeah, just the point there is, like, I think this is all healthy for the market if you can make it through this period of time As a company, you're going to be better off. As an investor, you're going to be better off. It's just going to suck for a little while, for sure.
Yeah, I mean, I remember in this previous bull run, look, I didn't want to believe it because in May of 2021, it got to the point. I think we were all at there was a conference in Miami. Forgot
Bitcoin
the
Miami.
no, that it was the NFT conference that we all went to. Um, anyway,
Oh, Art Basel.
our Basel. Our Basel was just the height to me. I was looking at our Basel and just looking at the people that were like what was happening. I was thinking, my God, 90% of these things are just fluff, are just
Yeah.
complete fluff. And when you get there, right, and when taxi cab drivers start talking about crypto, uh, you kind of you should be thinking, oh man, something like it's too hot. I will say though, I remember we were uh, we were actually in San Francisco in the beginning of 2021, and or middle of 2021, and one of the taxi cab drivers, or it was LA, it was LA, and one of the taxi cab drivers was like, "Oh, we overheard us talking about crypto in the back," and he started talking to me about crypto as well. And in 2017, Davica, when you referred to our time, they would say like, "Oh, what should I buy?" And in 2021, the taxi cab driver, who was about 60 years old, said, "Hey, what's the best language to learn to program in?" And so
Wow.
while it was going down the risk curve, right, it was a different conversation. And to your points, I mean, what we're seeing, folks, is we're not seeing a slowdown of energy. We're not seeing a slowdown of bright minds coming into the space like we did in 2017. 2017 pulled people out. Right now people are coming in. It's just like you guys said, that projects are getting weeded out, and it is healthy. It's very painful, and people are going to lose money, and god forbid people do something terrible, like there's stories of people taking their own lives, and just don't put in um more than you can lose, right? But the energy in the space hasn't stopped, the building energy. And in bear markets, when people actually start building, when you can't just raise money by putting crypto in, when you have to prove out a use case, like you said, a Web2 use case, and show revenue growth, right? Um, let me actually, I'm going to change gears on you guys for a second. I wanted to talk a little bit about, let's talk about Voyager Celsius 3C, because this is one of the draws that brought down the market. And one of the things that I do want to talk about, and everyone has made this distinction, but I would feel remiss if we also didn't make this distinction, is that CeFi, centralized finance, failed. DeFi protocols actually held up with, very, very well. They passed with flying colors, so to speak. And when people think about allocating risk, right, and contagion, we can maybe talk about that. Uh, Putting it into DeFi, Compound, Aave, and so on, DeFi protocols that are sound, that have been proven that the protocol works, actually worked like clockwork, right? Celsius failed, centralized. AC failed, three arrows capital failed, excuse me, centralized. Voyager, centralized, right? BlockFi is failing, centralized. It's the same exact, when I put money in BlockFi, I was thinking, this is not a crypto company. This is a Wall Street company putting crypto on its name. It took 2 days to withdraw. It was like, it didn't feel crypto native at all. What do you guys think about that? Are you guys seeing the same thing?
Yeah, yeah. I mean, definitely seeing the same thing. Seeing I guess the reason for me getting into crypto in the first place, kind of holding up, which it's Aave, it's Compound, it's these these protocols that are promising actual ability for anyone, regardless of skin color, age, credit score, social credit score, to get a loan on collateral that they own. That's all held up. They've never had an issue of a run on the bank. Everyone's been able to get their capital out. It's been amazing to see. I wish, and this is, I was going to throw this question back at you guys actually, because I'm not really sure the answer, but I wish that more people knew about this and could see the benefits of um, what DeFi protocols bring to finance for people. But like, what do you think gets that, for example, like an Aave or Compound to a mainstream level? how can we show the rest of the world what we see as being such a great opportunity for folks?
I think for me, it would really just be about education and educating people. And I think part of that is on the DeFi community of that specific, say, protocol, right? So if it's an Aave. And I think part of it is just creating more awareness by, like, in the larger crypto space of what's happening and what are projects that are actually helping people, that are actually sound, that actually work. And the reason I say this is because, if you go on TikTok, and the listing team knows that I love going on TikTok to see what's happening in crypto. But if you go on, if when I went to TikTok back in early 2021, mid 2021, everything that I was seeing was kind of trying to pump these like DeFi protocols that were just total rug pulls, right? Or they had these APYs that were completely unsustainable, and everybody lost almost everything that they had. And I think then DeFi gets associated with things like that, right? So they get associated with the ohms of the world, for example. And so, I think it's about not just Aave proving itself, but also the general crypto community creating more education for people who are non-crypto native to understand and make sense of the noise, right? So to say this is actually legit and this is not legit, and here's how you should choose the projects that make sense.
Yeah.
I think when one of the things is we're talking about this as listening team guys, we should do maybe Harrison for the people listening. So Harrison publishes a lot of our thought pieces through our blogs, and maybe one of the things we should do is actually talk about like a risk matrix. What are different risk types are there to educate people, David, to your point. And so, for example, there is counterparty risk, right? Counterparty risk means if I'm lending, if I'm Three Arrows Capital is a perfect example. If I'm lending to them, what are they actually doing, right? Then there's collateralization risk. Is it collateralized or not, right? Then there is protocol like blockchain, actual smart contract risk. Does a smart contract work? So I can start, uh, compound Alex compound with holes in my smart contract, which wouldn't work so well, and people can get hacked and so on. The Aave compound now work pretty well. They have staying power, and now you assess counterparty risk. Well, there is no counterparty risk with Aave compound. There very little because they're over collateralized. You put one Bitcoin, you can only borrow, call it a half of Bitcoin against it, right? And so if you get margin called, you have one Bitcoin that's sitting there, and you get all of it taken out. Unlike the traditional system where everything is on margin, so you put a little bit of money in, and much more of that is actually gets lent out. So the different types of risk buckets that people should think through as they deposit their money. I, for example, and I have some money stuck in Celsius because I should have pulled out more and I didn't, but I was always very hesitant. I put probably 5% of my total portfolio ever in BlockFi Celsius or any of these centralized parties because I thought, hey, if something, God forbid, goes wrong, they're going to take my keys, they're going to take my Bitcoin. And they did, right? Things do go wrong. And so you need to really do your due diligence. And this is where I think we can talk about regulation, but where good regulation will be welcome to say, can the government come in, or a government entity come in and help audit the counterparty, right? And stablecoins help audit or ensure that somebody's auditing a stablecoin, so they're actually backed with something, treasuries and so on, or liquid assets, instead of just fluff, right?
So
This so,
let
so
me
yeah, go
so
ahead.
let me ask you a question. I'm wondering this, and I'm wondering if our listeners are wondering this as well, which is, we're talking about centralized finance and how you should be looking at CFI versus DeFi. How is a centralized exchange like us different from centralized finance, and why are we to be trusted?
That's a good question. Harrison, you should take this one. I don't know why we're trusted. Why am I even working here?
um, I mean, I guess the biggest reason is that we're trying to, at least from someone that's, I'm not, I wouldn't call myself crypto native, but just having spoken to some people that are more crypto native, the reason that they like Okcoin is because they feel like we're actually just an interface into the decentralized ecosystem, the decentralized web. And without us, there would be several folks that wouldn't be able to access it.
Mm-hmm.
Um, Also, I think importantly, we don't do any sort of lending. And I think that's where people get off base. Celsius, Voyager, they're giving out loans without having the proper risk controls set up. And I was curious. I'll finish answering this question before ask the question. But I think that's the biggest thing for Okcoin is why I feel comfortable keeping my funds here. We don't have any leverage issues. We don't have any financial risks. We actually don't even have any third party investors to answer to. So I feel very confident about the service that we provide and being able to keep it going despite market conditions.
Yeah, absolutely. And I will say that when everything was happening and the news of the downturn was happening, there was a lot of people online talking about how, and this didn't happen, but how Coinbase might be closing withdrawals as well. And I thought to myself about where do I want to put my all my crypto? And a lot of it was, back from 2017, 2018 in Coinbase. And I actually pulled all of it out and I put it in OKCoin.
Hmm.
Uh, and the
I
reason for
did
that,
too, actually. I didn't
yeah,
realize you did that.
actually,
Yeah.
and not because I work here. I mean, that's part of it, but I think a lot of it was because I've seen our risk management team, I've seen our customer service teams, I've seen our engineering teams, and I felt confident that this was not a company that was trying to like lock my funds. And to Harrison's point, we don't have any external investors to answer to, so they weren't gonna freeze my funds and try to give them to another investor who needed it before me.
Yeah.
So I felt very
And,
confident with at least looking at Coinbase, I mean OKX and OKCoin, keeping my funds here.
and for those of you that don't know Devika as well as I do, she's a skeptic to the nth degree. When she first started, I definitely think she's done her due diligence and she's not just blowing smoke because she works here.
Totally.
Yeah, one of the things for our listeners that you can do is, for example, a lot of us, Gemini, Coinbase, Kraken, all the Binance, all the major exchanges offer earn products, for example. And so the different ways of structuring earn. What we do is we take your funds and we pass them to Compound or Aave and put them in there and use whatever rates those protocols give us, we give you. We don't charge. We lose money on it because we pay gas fees. There's not. We don't take any. There's no spread. There's no cut. Others, and that's one way of doing it, right? Others manage the money. Celsius is a good example. They said, hey, we'll give you 7.96, whatever it was, 8% on your funds. You give us your funds. They take your funds and then they lend it out across different protocols. And then they essentially, it's a money market fund, more or less, right? And so we don't do that at all. So one of the things you can do is you can go in, instead of shopping around rates and just go for the highest rate, I would look at, and we disclose this fully. Hey, when you go to our earn page and you want to stake, whatever it is, you want to stake any kind of coin, we show where it's being staked and what protocol. Go to that protocol's website and look at those rates. If the rates are the same, and do the same thing for our competitors, the rates are the same, you know what's happening. If the rates are different, right? If the rates are different, then you know that they're managing funds higher or lower and so on and so forth, right? And ours might be a little different here and there just because it takes some time. We refresh every 24 hours, or I don't remember exactly when. So you can have a little bit of a difference if if the protocol changes the rates with intraday. But this shows you whether it's a managed pool of money or it's a pass-through pool of money. When it's pass-through, your risk is with the protocol, and then with the exchange, they know that we can take it, send it, and send it back, right? There is risk with that. There's risk with us. There's risk with any third party that takes your money and passes it through, right? That the risk is the same. It's technology risk. Um, if you are putting it into BlockFi or Celsius or others, there's that same technology risk, plus there is counterparty risk, plus there's money management risk, plus there is execution risk on behalf of the professionals within those companies that do all this. That risk might be worth it for you, might not be worth it for you. I will let everyone make their own decisions on that. Um, and in fact, David, it's funny. I have my funds in many different exchanges for many reasons. One, I want to see how they work so we can make our product better. Two is, this is, you have to kind of have smart risk management in this space. And I actually took all my money, all of it, off Coinbase and brought it to Okcoin. And we didn't talk about this before, or did we?
Or did I put all my money in OKCoin once you put your money in OKCoin?
Ah, there we go.
Did
I
you
Well,
waited.
have
yeah,
either of you ever used leverage to buy crypto or buy
I have
like assets more broadly?
I have. And that was a
Can you
big mistake. I made nothing and lost all of it. Don't use leverage. Everyone says it. I heard it. I still did it. And yeah, it wasn't up and to the right. It was down and to the left. Basically, that's what happened to my investment.
Yeah, I think on the DGen score, I'm like a pretty conservative investor. I started off with just Bitcoin and ETH, just bought outright, no leverage anywhere. And then I started dabbling in the alts over the last few years, more so in the last year and a half. But haven't done anything crazy in terms of how I bought things or leveraged things or lended things yet.
Harrison,
Yeah,
what about you?
no, I've stayed away from it, fortunately. Um, but yeah, I think that's. I mean, I think that as far as like bear market tips go, like Alex just gave us a perfect anecdote of why to not use leverage. But just in general, I think that allows you to stay invested for longer periods of time, and also making sure you invest what you are comfortable losing. Also helps you to stay invested for longer periods of time, and it lets you ride out these terrible price declines, right? So, um,
Yeah, I think
Uh,
I think the other one that I would really say for the bear market is that only buy tokens for projects that you really believe in, and that you've done your due diligence. So everybody on Twitter is always saying do your own research and not financial advice, but people do take it as financial advice. I've definitely done that in the past. I've seen an influencer say something, and I've thought, okay, let me just buy a few tokens of this project without doing any of my own research. But I think looking at my current portfolio, I actually divested in everything that wasn't a project that I felt very comfortable with, very excited about. And I think that also makes me feel less stressed out during the bear market. I'm convinced that the token projects are building. As Alex said, they're using this time and the funds they have to create something really exciting, really cool. And I don't feel like I have to worry that they're going to fold and take all of the money that I put into the project and just buzz off to Bahamas or something.
Before you buzz off to Bahamas, I have a question for both of you. Let's leak some alpha because we know that's what people are actually watching this. If you watched all the way through, say, 30 minutes in or so, here we go. So we are, we can't say what we're listing or not because we really don't know. We also have a kind of a walled off legal and compliance team that makes sure and looks at all the tokens we suggest to them and to our executive board. Uh, but let's talk about themes. What are some interesting themes that we're seeing in the market now that we're kind of bullish on?
Yeah, I can start. So I think the biggest one that we've discussed and we're seeing, and the venture partners that we work with are seeing as well, is infrastructure projects. So as the market crashes, as a lot of projects are going out of business, what we're seeing really is people going back to the fundamentals and trying to build projects that have sustainable technologies that have, services that other Web3 projects can leverage in the future. So some really exciting projects that we've seen have, either are building decentralized cloud services, or they're allowing for decentralized API nodes for decentralized apps to call on, or even decentralized access to gaming engines, traditional Web2 gaming engines. So I think the biggest theme that we're seeing, and that I think I'm really personally excited about, is looking at the infrastructure projects that are coming out. Harrison, what are you excited about?
well, like we said earlier, crypto's dead, so I'm not really interested at all. No, I'm just kidding. No, I think so. A couple things on the horizon, and I don't think I can say. I'm not going to say the name, but there's a few games. One game in particular, they're making some pretty big announcements. They've been building on Unreal Engine 5. I don't think.
We've
Yeah,
answered.
that's not too big of an alpha leak. But yeah, anyways, there's a few games that we know of that are put together a world class gaming experience. It's just been taking a while for it to get released, and I think that could, given the way that play to earn works, incentivizing players to actually spend their time on something instead of vice versa, um, and actually putting high quality graphics experiences in. Though there are a few games I think that will last all of this metaverse and NFT craze. So that's one of the things I'm most excited about, and hoping eventually we can list a few of these too.
Yeah, Alex, throwing it back to you. What are you excited about? What are
Mhm.
you seeing?
I do like infrastructure. I won't mention any names, but for those of you, just look at our blogs and look at yeah, exactly, and look at some of the things that we've been listing and kind of see it thematically. Um, I'm torn on gaming. I was a big fan. I think it's an actual huge use case, but we need a breakthrough of a game that's fun to play, beautiful to play. Maybe this is your Unreal Engine 5 game, and also has thought through a tokenomics that like Axie Infinity was hyped and it was great and it was fun, but it was a very basic game. And so when the market crashed, Axie crashed very hard, right? And so uh, yeah, so that I think there's that, and then there is I want
Wait,
to
wait,
see,
wait, Alex. I want to ask you something you just said. I want to dig in on that. You thought Axie Infinity was fun?
you know
Did you play Axie Infinity?
you know I maybe have battled. I might have had some axes. Might have, you
Are you a
know,
land baron, an Axie land baron, and we didn't know about it?
you're just giving away all of my secrets. Um,
Alex doesn't actually work here. He just plays games all day. That's
hey,
his
it's called market
turn.
research. It's called market research, David. Like, I mean, look,
Why he, so why
Axie's
he hired
cute.
us is just to do all the work.
Yeah, that's right. That's right. Axie's cute, guys. Right? I mean, like, it's a simple game. You battle out. You can spawn other Axies and so on and so forth. It's cute. It's nice. It's a good push into the gaming space. But we see how much it's fallen, you know, in the bear cycle, which means it doesn't have staying power,
And
and that
would you
might
say
be okay.
But would you say most of that is because, I mean, a lot of these play to earn games, they start off with an NFT that you have to buy to play. And the NFT is so expensive at the peak of the game. And even if you have guilds and they're buying, NFTs together, it's just people are spending more money trying to play the game than they are making playing the game. Which just shows you that, these games are not really sustainable and aren't built
Yeah.
for people, at least for now.
Good point.
So yeah, this brings up a good point, and yeah, Harrison, I want to hear your opinion as well. But this brings up a good point about doing your own research, and this is a good lesson for everyone. We actually talked about this today as a team. Everyone builds for an uptrend, right? Axie is building, building, building in a down market. They started in the bottom of a bear market. All they've seen, and not to pick an Axie, right? They've had great success, but pretty much all the top projects now have built, started in a bear market, and only saw the way up. So when you're calculating, you think through your tokenomics and the gameplay or any kind of incentivization structure, it's almost like an echo chamber of it's working, it's working, it's working, it's working, because everything is going up, right?
Yeah.
But when the thing turns, there's no break to maintain momentum. To your point, it's going to cost too much to actually play, and when there's no break to maintain the momentum, it's a huge problem, right? It's a huge, huge, huge issue of keeping people within your ecosystem, and it unwinds much faster than it builds.
Well, I was gonna say with Axie, I think they were a victim of timing in some ways. Their peak growth hit right before they were going to launch their mobile game, which
Mhm.
the graphics I've seen, I was making fun of it a little bit. Just the simple battle game, I think gets old after a while. It's fun at first, but it gets old. But their mobile game, it was going to be almost like Farmville, but or more like Pokemon, honestly. But then you have the ability to own land and battle within the game. There was a lot more features to it, but that came out too late after the bear had already started. And I think a lot of people they lost a lot of users because people weren't able to make money and spend as much time as they had been during the peak. So that's one thing too, where macro factors can kind of have an outsized effect on certain games, maybe because they are in the public markets versus being able to access the private market capital.
Yeah.
Do you
What were
think
you
it's
gonna say?
also something that I feel, and it's kind of a hot take, is that even though this is an innovative market, once one business model is seen to work, there is little innovation in that business model. And the reason I say this is just looking at the GameFi space. Axie had a model and it had some tokenomics and it worked in the bull market. And then every game that came out had the exact same tokenomics, give or take. And there could have been things that were improved. There could have been a different kind of NFT to start playing the game. You could have made people join the game in a different way. But I just felt, at least personally, that the innovation was a little bit lacking in the bull market because people didn't feel the need to innovate because everything was going well. And I'm actually excited to see what people make and come out with in the bear market, especially in gaming. And I'm curious to see what new business models people come out with that aren't just copying the one project that worked, a year and a half ago.
So, guys, I think we need to do a round robin of okay, not okay questions. Now that we've gone through gaming, alpha leaks, other important things, let's do something a little bit more fun. I want to know about you guys personally. I don't spend enough time with you.
Uh,
I miss you both. We're virtual.
we don't miss you.
Oh man, what a knock. What a knock. Well fine. The first one's going to you, Davika.
All right.
Okay. Those little borders in bowling, you know,
Okay. The
okay or not
guards.
okay.
A
The
hundred, a
guardrails.
100% okay. I don't have to be accurate to be good. It's like playing pool. I have math, and I kind of use the guards, and it hits the different guards, and then it gets somewhere. So
Before
okay,
before you go on, I have a follow up to that. Now guardrails, those little guards in bowling, if you're over 10 years old, it's not still the same answer or not.
well, I usually say that I have a cousin who's under 10 who wants to play with me, and the cousin never shows up. So still okay.
Those unpunctual 10-year-olds.
Okay, I'll ask you guys. Okay, not okay. Salad with strawberries.
Definitely
Absolutely.
not. Definitely
What?
not okay. No.
I love salad with strawberries.
Harrison.
What kind of dressing do you use?
Oh.
Balsamic.
Mm.
That's so. It's just the wrong. You can't mix sweet and savory, in my opinion, unless it's like
Strawberry vinaigrette with
okay,
strawberry sprinkle on top.
yeah, maybe. I just.
And
Why do you want to eat dessert in a salad though? Like, I just. That's what I don't understand.
Are you against having pineapples in your pizza as well?
It's not. I'm not a. I wouldn't recommend it.
Harrison. Harrison, we need
Is
to
it-
have a discussion.
You guys are team pineapples on pizza?
Oh
Oh yeah,
yeah.
we're team pineapple. I think Harrison needs to find a new team.
Yeah.
Whoa.
Where are we gonna put in engineering? Yeah, heartbroken.
This
We're
is this is
heartbroken.
officially Harrison's last day on the listing team. It was nice knowing you.
No strawberries. No. How about strawberries in your pizza, Harrison? We can do pineapples. I've never had that before, but let's see what he says.
No. I will do. I
You
had
should
pizza
just
recently. It was like a jalapeno jam.
That sounds good.
It was
on your
drizzled
pizza.
on top.
With prosciutto would be good.
Yes, exactly. It was with prosciutto. It was really good.
I would do it. Okay,
Okay.
let's see. Okay, I have another one. Okay, not okay. Buying Bitcoin with your credit card.
Absolutely okay. Buying Bitcoin with anything is definitely okay.
So
Harrison.
long as you have the means to pay off your credit card debt, we'll just not financial advice.
All right, Harrison. What about your okay, not okay?
Um, this is it's not spending. Let me think about it. Day trading options instead of day trading altcoins.
If you're
Mm,
good, I guess okay.
all the way. Not okay.
No.
Not okay.
Okay. Socks and sandals.
Not okay.
Okay, if the
Yes,
sandals
he said
No
okay. He said okay. He said
way.
okay.
if the sandals are not thongs,
Like, what,
Oh,
you're
that's
a dad
amazing.
already? Like, what's happening?
What if your feet are cold, Davika, and you gotta like thong it up in the
Beauty is
sock?
pain. Beauty is pain.
What do you mean?
my hairline's receding. I'm preparing for old age. This is how I
You're
express
there
it.
already. You're like wearing your socks. You're going outside, picking up your newspaper.
It's the bear market blues. It's the bear market blues. All
Okay,
right.
what about
Go.
earrings on men?
Sure.
Definitely okay.
Yeah.
Nose rings on men. Back to
What?
you. Nose rings on men.
I will never yuck someone's yum. That's my call. don't yuck my yum, Devika. What if
I
I'm
mean,
gonna come in.
you can wear it. I just don't want to see it.
I just gotta talk to you like this. I'll talk to you like this. All right, okay. I have one. Eating soggy cereal.
Okay.
Not okay.
I
What
mean,
if you have the chocolate milk behind it, Harrison?
Chocolate milk soggy cereal. It's still
I would do
questionable.
it.
I feel like I would do it too. I feel like Harrison. We're just this is very illuminating. This we need to have a team building offsite
I know.
to. We're gonna do American Ninja Warrior Harrison, but with like the okay, not okay stuff: pizza, salad, cereal, and then he's gonna make us straight options.
And leverage and like leverage everything.
That's right.
You
All right,
guys know
Harrison.
There's no saying.
Last one is for you. Okay, not okay.
you guys are putting me on the spot a little bit.
David, putting Harrison on the spot. Okay or not okay?
As always. Come on, Harrison. Think of something funny.
Ooh.
Ooh.
Uh, texting while rock climbing. Okay, not okay.
Am I tethered to anything?
Yeah, you're tethered.
Okay.
You're tethered to circle.
I knew that there was going to be
These
some
are
cryptic
jokes.
there.
I think it's okay. Selfies while rock climbing, also okay. You're like, look, I'm on the rock. Boom. But you know what? As long as you have somebody belaying you and they got your back, it's okay. Guys, I think we need to wrap it up. I think whoever is watching by this point is like these guys, how is this listings team? But hey, we gotta have fun. And like we said in the bear market, just sometimes, and this is an exchange talking, just step away, spend some time on your mental health. It's hard, it's not fun. Um, and
Set
then
those
when you
recurring buys and
set up
set
those recurring buys, DCA into the market, actually, very, very important. And then, when you're ready and you're ready to use good earn products and trade, we would love to have you come by.